So does the house always win? Maybe in the casino it does, but not in the real estate market. I'm going to show you how to win by buying a home in beautiful Las Vegas. Stay tuned. What's going on, my YouTube friends? This is Jerry Abbott, your favorite Las Vegas realtor. Hey guys, before we dive into the video, 3 real quick things. Number 1, if this is your first time on the channel and you want to learn everything there is to know about the Las Vegas real estate market, then definitely consider subscribing down below, and also hit that thumbs up like button. That would really help the channel out too, guys. And number 3, I'm a local realtor here. I've lived here for nearly 20 years. If you're thinking about relocating to beautiful Las Vegas, I got your back. Just call, text, or email me anytime, and I'll help you find that perfect dream home. Let's dive into the video. Okay guys, so seeing that we're in Las Vegas, there's an old expression in this town that the house always wins. And that basically means the casino always beats the gamblers out of their money over a long period of time. It's a mathematical certainty because the math favors the casinos. So I did this video, instead of talking about the house as in the casino, I'm talking about literally buying a home in Las Vegas. And by doing so, historically speaking, you can stack the odds in your favor like the casinos do. And I'm about to tell you exactly how to do it. Okay guys, let's briefly talk about the US real estate market before we drill down specifically into the Las Vegas real estate market. Across the country, it's been absolutely bananas. And as you can see with this on-screen graphic here, people are spending over $1 million on asking prices of homes across the country. And that's not unheard of. That's happening in different cities across the country. And the reason why is there is huge demand from buyers and much lower inventory, much lower than we've ever had before. So how does this now drill down specifically into the Las Vegas market? So take a look at this Las Vegas housing inventory graphic on screen right now. You're going to see this downward red arrow. That's showing the last few months, actually the last 4 months consistently of declining inventory. We had about 3,500 homes, then we got to the low 3s, then we got to about 3,000, and then at the very end of 2021, we got to about 2,200 homes for sale on the market. That's incredibly low. Well, now in January, when I'm filming this video, we're actually at 1,800. This is the lowest inventory in years. So what I want to show you now in the next graphic is the actual home appreciation in this last year. So if you take a look at this graphic here, you see about a year ago, the average median home price in Las Vegas was about $340,000. 1 year later now, coming right up to 2022, the average median home price is about $430,000. And the reason why that's happening and the price appreciation has gone up about 25% is because of the low inventory. We can't get enough supply on the market. So because there's such an inventory crunch, demand just keeps driving those prices up. So aside from record low housing inventory across the country, people are now starting to get very nervous about the stock market. The stock market has been in a bull run for over 10 years. In my opinion, it's massively overvalued. And now the news from the Fed that just came out is that they are going to start raising interest rates at various times during this 2022 year. So what does that mean? It means people get nervous because when they raise interest rates, that means it costs more money to buy a car, it costs more money to get a mortgage. So people get a little bit uptight at this time and they start pulling the money out of the stock market. That's the reason why we've been in a correction right now. So if the Fed raises rates, a lot of people are going to start thinking, hey, the stock market is not a great place for us to park our money. A good place to park our money is in the housing market. So that's why another factor as to why people are pulling money out of the stock market. They want to pull it out because they want to potentially put a down payment or buy a home in cash while the interest rates are still low. Now, there's another reason why the Fed needs to raise interest rates. It's because we're at 40-year record high inflation. And what that means is when we're at record high inflation numbers, we have to get that under control. So the Fed does that by raising interest rates, but they got to be careful. They can't raise it too much or too frequently. Otherwise, it could crash the economy and create a recession. But what is one of the best things you could ever own during a hyperinflationary time? Real estate. That's why people are starting to pull money out of the stock market and try to pour it into real estate. They have been doing that for the past year. But the other factor now is because interest rates are going to go up, they're trying to get in now to get a good interest rate, to get a lower mortgage payment, because if they do that, they can lock in a great mortgage rate now while interest rates are still relatively low before they raise rates. Here's the secret. This is the secret to beating the house that a lot of people still are not privy to. Even if the Fed raises interest rates 4 times like they're predicting during this year, they're going to do it at about 25 basis points. So 25 times 4 means the Fed might raise interest rates 1% this year. I personally believe they're not going to raise it 4 times. I think they might raise it 2, maybe 3. So let's say interest rates go up 0.5%, maybe 0.75%. That still keeps your interest rate at around maybe 4%, maybe a touch over 4 at the end of this year. That's still an incredibly low interest rate because when we're in a hyperinflationary time, inflation is here to stay. So real estate prices are going to keep going up. But if you can lock in a rate in the mid 3s, the high 3s, even the low 4s, you're still well ahead of the game. That's the secret to beating the house because you get to lock in a low interest rate while prices are still appreciating with real estate overall. Now, I know what a lot of you might be thinking. Yes, interest rates are still pretty low, but real estate prices are sky high and out of reach for you. But what you really need to do is you need to focus on the low interest rate. If you can lock in a mid 3.5% rate or even a 4% rate, that's still very, very low compared to the hyperinflationary time that we're living in. I don't care what anyone says. Inflation that we have right now is not transitory. We printed $3.5 trillion. It's not going away anytime soon. The pandemic has not gone away. We have supply chain issues across the board all over the world. That's going to keep inflation higher. So if you have a low interest rate, but we're still in a hyperinflationary time, that means real estate prices are going to keep going up. So if you sit on the sidelines and wait, you're going to end up paying even more for real estate during this inflationary time. So what I want to do now, guys, is I want to bring this back to the Las Vegas real estate market. I want to show you how some of the major metropolitan cities first in other parts of the country compare to the Las Vegas market and how this market is really beneficial still from a real estate standpoint. So let's take a look at the first example. Let's start in Los Angeles. The average price point, very high, over $900,000, and the home appreciation is 16% in the last year. Now, let's take a look at Seattle. Seattle has got an average price point also of about $900,000 with an appreciation factor in the last year of about 12%. Now, let's go all the way over to New York. New York, $737,000 as an average price point, just over 5% appreciation. A little bit lower appreciation here on the East Coast in these major metro cities. Now, after that, we're going to go here to Boston. Now, Boston, just over $700,000 as an average price point, just over 5% for appreciation in the last year. Now, let's roll this all the way back to Las Vegas. Now, Las Vegas, you can see here, the average price point is just under $400,000. That's probably off a little bit, but it's a little bit over $400,000, but still very affordable compared to some of these other major metropolitan cities. But take a look underneath the average price point. The appreciation has gone up 26%. And what that means is this is a very high appreciating city because what this is really doing here in Las Vegas is we're really playing catch up to some of these other major metro cities that are very expensive to live in. But Vegas, even though it's still pretty far behind and still quite affordable, it is going up, and it's gone up the most out of all of these examples that I just showed you. So the bottom line, guys, is the secret to beating the house is twofold. Number one is to buy a house in a place like Las Vegas. I just showed you some examples of some other major cities in the country where the home prices are incredibly high compared to Las Vegas. Now, Las Vegas is starting to catch up. The appreciation has definitely gone up. This is the city that has it all, so prices are starting to reflect that. But it's still very affordable compared to a lot of other major metro cities. Yes, there are other cities in the country that are also very affordable, but Vegas is a very unique city. It's got it all, unlike a lot of other cities, and it's still affordable. Number two, interest rates. Interest rates are still very low. If the Fed decides to hike rates up a little bit, even if you're a 4% interest rate, or maybe even a little bit higher when it's all said and done, that's still very low. It's still a very wise time to try to lock in a low interest rate, especially now. That's why there's been such demand, because people are trying to do that. So if you can buy a home that's affordable in a place like Las Vegas while locking in an interest rate, that's the best of both worlds. So if you decide to buy a home in Las Vegas while securing a low interest rate, that's one of the best things you can do with your money. And I'll tell you why. 10 years ago in Las Vegas, the average home price here was $110,000. Today, it's $430,000. So you can see that there's an upward trajectory for the Las Vegas real estate market, and it has been for the past 10 years. Not to say that it will catch up to some of the other major metro cities, but over time, it's going to get more expensive. So if you have the ability to buy a home now with low interest rates while they're still low, it's one of the best things you can ultimately do with your money. So last but not least, guys, is that this Las Vegas real estate market and the real estate market across the whole country is very tight. Inventory, like I said earlier in the video, is very low. Demand is very high. You need an aggressive agent who's going to work to make the job not only seamless for you, but also make sure your offers get accepted. A lot of agents don't do that. I do. I will help you find your perfect dream home here, but you got to reach out to me. Just call, text, or email me anytime. I'll answer any questions you have, and I'll certainly help you find that perfect dream home. See you guys in the next video.